Hi everybody, this is Alan Ellman, the Blue Collar Investor. In today's video, we're going to discuss how to set up a technical chart for the Blue Collar Investor system of selling 1 month covered calls. First, let's talk about what exactly is technical analysis. And the definition is, it's a method of predicting future stock prices based on historical stock price movements. And we use technical analysis for a lot of reasons. Number one, stock selection. But we can also use it for our buy-sell decisions, our strike price selections, and exit strategy determinations. So technical analysis is a critical tool in the armamentarium for covered call writers. Now there are a lot of technical parameters. What I'm going to discuss today are the 4 that I use, but feel free to use whatever parameters you're comfortable with. What I do suggest is once you decide on the parameters that work best for you, use them consistently so that when you pull up a chart, they're all going to be the same and you'll be able to make decisions on the technical parameters very, very quickly. The 4 parameters that I use are moving averages, which identify trends and areas of support and resistance. I use the MACD histogram, which is a trend following momentum indicator. It's a very good predictive indicator of the future price movement of a stock, as compared to moving averages, which identify trends but don't predict the direction the stock may head in the future. The stochastic oscillator is another momentum indicator, and it'll show areas that are overbought or oversold. And finally, we use volume, which will confirm the other indicators. In other words, if there's a change in one of the other indicators, and if it's on very weak volume, it's less significant than had that change occurred on very high volume. We also look at things like volume divergence. In other words, if a stock price is accelerating, but the volume is declining, that could indicate that that trend is going to end very quickly. So let's construct our chart. Now, one great free website is stockcharts.com. That's the one that I'm going to use in today's video. Another very, very good one is freestockcharts.com. Alright, so what we do is we go to the home page, and this is what it looks like here. And I drew 3 arrows on this page. The left arrow says sharp chart. That's the kind of chart that we're going to pull up here. It's a free service. The middle arrow is where you put in your ticker symbol for that particular stock, and you hit go, the right arrow shows. Next, we put our chart settings. So on the left side of this slide, you can see the settings that I use, and the right side will show you where to put those settings. So for periods, we put daily. That's on the left middle of your screen. The range is 1 year. Underneath that, I use OHLC bars. Many of you may prefer candlesticks. The size of the chart, you could put 700 or landscape. Underneath OHLC bars, volume off, what that means is the volume bars won't be on top of the price chart. We're going to set it up so that it's actually underneath the price chart. Next, we turn to overlays. Now, I use 2 exponential moving averages. The 20-day, which will mirror the 20 trading days in a 1-month option cycle. And I also use the 100-day exponential moving average, which will give you a longer-term comparison. So we have the shorter-term 20 and the longer-day 100. And I use exponential as opposed to simple moving averages because they'll give you quicker changes in the price of a stock. So that takes care of the overlays and parameters. Underneath that, we have our indicators, and you see the MACD, which will give us the histogram. The parameters are 12, 26, 9. So we take the 12-day moving average, we subtract the longer-term 26-day moving average, and then we could take a moving average, a 9-day exponential moving average of the MACD itself, and the subtraction of those two will give you the histogram. And for more information on that, you can visit my website, and I have a ton of information on technical analysis in my books and DVDs. On the right-hand column it says position, and we're going to position all of these indicators below the price chart. Okay, the second indicator we use is the slow stochastics, and you have an opportunity to use the fast or full stochastics, but the slow stochastics will give you a smoother chart pattern. And the parameters are 14.3. It's a 14-day trading range, and we use a 3-day simple moving average of that, which we'll show you in just a moment. And once again, it's positioned below the price chart. And finally, we have volume, which also is placed below the price chart. So here's what a chart will look like with those 4 parameters. You see on the top the OHLC bars, the 20-day and the 100-day exponential moving averages. And in the middle of the chart you see the MACD, which is highlighted by the red arrow. It's the thick black line. And the histogram, okay, which is the subtraction of the trigger or the 9-day exponential moving average from the MACD itself. And the histogram is shown in a bar chart form, so those blue bars indicate the histogram, and basically we just want to see the histogram above 0. That would be a bullish signal. And on the bottom right you see the stochastic oscillator, which is the thick black line, and the moving average of the stochastic oscillator is the red line adjacent to it. And finally the volume bars on the lower left, you see the red arrows highlighting the volume bars on the chart. And so for me, every time I set up a chart, those same indicators positioned in the very same places are going to be on the chart. And I'll be able to evaluate a chart in just a couple seconds. Finally, I want to show you that the price chart can actually give you a lot more information than what I just discussed. For example, let me take the trading range, which you see on the top of the screen, these 2 green lines. That's a trading range. In other words, the stock price isn't trading up or down, it's going sideways. And the moving average isn't really effective when you have a stock in a trading range. So we don't really know whether or not that stock is going to eventually go back up, which it did in this case, or go down. So if you're going to use the stock and you see it's in a trading range, you might want to opt for an in-the-money strike to get that extra downside protection. Or if you have 2 charts and one stock is uptrending and the other one's in a trading range, you might opt for the one that's uptrending. Let's take another one. Here on the bottom left, you see volume spikes, and you see those spikes are way higher than many of the other volume bars, and usually that will indicate that some kind of news came out that made the trading volume very high. You'll see it very frequently when earnings reports come out, but it also could be good or bad news coming out about the stock, and a lot of shares are traded. So again, being able to read a chart is critical to the success of covered call writers. We don't have to make it too complicated. That's why I only use 4 parameters. But once you've decided on which parameters you're comfortable with, I suggest that you use them on a consistent basis. So I hope you found this video useful. As always, I can be contacted at Alan@thebluecollarinvestor.com, and you could visit my website, thebluecollarinvestor.com. It has a lot of information on this subject and many others related to covered call writing, and I devote a large part of my books and DVDs to the subject of technical analysis, which I think is so important to our success and elevating our profits to the highest possible levels. So I thank you for watching this video. I look forward to hearing from you. Take care, everybody.